Are you a YouTuber who's now making 6 or 7 figures from your YouTube channel? If so, do you want to invest and grow your hard-earned YouTube money tax-free? If your answer to both is yes, then this video is for you. I'm going to be sharing 3 ways you can use to invest and grow your hard-earned YouTube money tax-free. Option number 1, open a solo 401k. If your YouTube channel is mainly run by you, maybe your spouse helps, maybe you have a couple of independent contractors, no W-2 employees, then you may want to consider a solo 401k. You can pretty much open one through any brokerage firms like E-Trade, TD Ameritrade, Vanguard. The most important thing that you want to do here is open a Roth solo 401k, a Roth solo 401k, in order for you to be able to invest and grow your money tax-free. The beauty about doing a solo 401k or Roth solo 401k in particular is, in addition to being able to contribute as the employee, in 2020 the maximum IRS limit is $19,500, you can also contribute as the employer because you're running your own business. You're both the employee and the employer, so you can do both. In 2020, the maximum you can put in this Roth solo 401k is $57,000. So think about this. Your friends who have regular jobs in companies or nonprofits, they're only able to contribute as an employee up to $19,500 for 2020. But you, as a YouTuber and small business owner, if you wanted to, and if you're eligible, might be able to potentially contribute up to $57,000 this year. So that's mind-blowing. Let's do some math. So assuming you do that for a span of 10 years and you hire a financial planner to help you invest it, and on the average, let's say you make 6% return, then at the end of 10 years of contributing $57,000, investing and growing your money, you would have made around $750,000 all tax-free. So let me know in the comment section if you would like to have $750,000 in tax-free money. Now, again, this only works is if you do not have a W-2 employee. Now, if you do have a W-2 employee, this brings us to option number 2. If you're a YouTuber and you want to invest and grow your money tax-free, option number 2, this applies if you have W-2 employees, is you can open a regular 401k. Now you're probably thinking, Alvin, regular 401k isn't that only for like large companies? Well, that's actually not true. Our company, District Capital, we only have 3 owners. We have 1 W-2 employee, and we have 2 independent contractors, and we have our own regular 401k up and running. But maybe you're gonna be like, Alvin, that's because you have a finance degree and you can navigate all these complex 401k stuff. Well, I mean, I can relate to that. I used to work for a nonprofit, social justice nonprofit several years ago. And when I realized that our 401k plan was terrible, it took me a couple of months to do some research to find the best 401k plan vendor at that time, back then. Now, that was like 10 years ago. Because of innovation and competition, you can now find a good 401k plan vendor who's going to be affordable, who's going to be taking care of all the compliance work for you. Now, if you're a client of District Capital, we'll obviously point you to the best 401k plan vendor that we know out there. Now, the key thing here again is you want to choose the Roth 401k plan option, right? If you open a regular 401k, you want to have the ability to do Roth 401k contributions so you can invest and grow your hard-earned YouTube money tax-free. Now, the other beauty of doing a regular 401k plan is you can, if you wanted to, do a profit sharing option where you can again put more than the IRS limit of what an employee can contribute in a year. Now, the main caveat of doing a regular 401k is you typically need to have a matching contribution to your W-2 employees. But you know what? That's not necessarily a bad thing. You want to be a good employer to your employees who's helping grow your YouTube channel, and what's 3% matching. I think that's gonna make them happier and maybe more productive, who knows. So far we've talked about opening a solo 401k if you're a YouTuber, no W2 employees. You can also open a regular 401k if you have W2 employees. What is another way that you can grow your hard-earned YouTube money tax-free? This brings us to option number 3, which is contributing to a Roth or a backdoor Roth IRA. Now, don't confuse this to what we just talked about, options 1 and 2, which is a Roth solo 401k. 401k and IRA have their own separate limits. They're completely separate. You can contribute to both a 401k and an IRA. Again, as a reminder, the nice thing about a Roth IRA is you're able to grow your money tax-free. Now, there are some income eligibility for contributing to a Roth IRA. So if you're now above the Roth IRA limit, let's say your YouTube channel is really taking off and you're no longer eligible for Roth, then you can contribute to a backdoor Roth IRA. If this is something that applies in your case, we have a separate, more detailed video on how to do a backdoor Roth IRA. We break it down into 3 simple steps, so make sure you check that out. Now, I do want to take a second and give a shout out to Heather Ramirez. She's an amazing YouTube coach. I have zero knowledge on marketing and YouTube, so everything that I've learned from YouTube so far is from Heather, and I'm actually dedicating this video to her. I hope you're watching. I know you hate talking about money, but I hope this is going to be helpful for you and Tom. So going back to our option number 3, how to invest and grow your money in a tax-free manner. That is to contribute to a Roth IRA or a backdoor Roth IRA. So there you have it. If you are a YouTuber and you're making 6 or 7 figures, you want to invest and grow your money in a tax-free manner, you can choose to do a solo 401k or regular 401k and supplement that by doing a Roth or a backdoor Roth IRA option. If you would like us to help guide you in investing and growing your hard-earned YouTube money tax-free, you're welcome to schedule a free 30-minute discovery call with us. I am gonna put the link in the description section below. Until next time.